Hey guys, welcome back to the channel. I'm Luke, an ACA qualified accountant, and in today's video we're going to be discussing and introducing the concept of accruals. Accruals is one of those areas of the accounting fundamentals syllabus that candidates really struggle with. So in today's video we're going to define and explain what accruals are, and we'll also run through how to account for them within the financial statements by looking at a full exam question. So yeah, let's get into it. Okay, so to give a true and fair view of a business's performance, the statement of profit or loss must match income and expenses to the period in which they occur, not just when the cash is received and paid. So this is where both accruals and prepayments come into play. So we'll start with accruals, also known as accrued expenses. An accrual is a current liability recognised when a business receives the benefit from an expense in the current accounting period, but won't pay for that expense until the next accounting period. So it's essentially the opposite of a prepayment. With a prepayment, the business pays in advance for something it's going to benefit from later, but with an accrual, the benefit from the expense is received by the business first, and it's paid for later down the line. So when we recognise an accrual, we need to do two things. First, we record an expense in the profit or loss account because the business has incurred the cost and received the benefit from the expense in the current accounting period. So that needs to be reflected within the financial statements. Secondly, we need to record it as a liability, so a payable in the statement of financial position, because the business is going to need to pay for that expense in the next accounting period. So recording an accrual as a liability ensures that the accounts accurately reflect what the business has used and not just what it's paid for in the period. So let's look at how we account for an accrual. We start by debiting the relevant expense account in the statement of profit or loss, reflecting the fact that the business has incurred and benefited from the full cost of the expense during the current accounting period. On the credit side, we split the amount. We credit cash for the portion of the expense that was paid for by the business during the current accounting period, and we also need to credit the accruals account to reflect the unpaid portion of the expense, so the amount still owed by the business for the expense at year end. So hopefully this is clearly shown on the slide. The amount of the expense that's been paid for goes to cash, the amount of the expense that has not been paid for goes to accruals, and it's going to appear as a current liability in the balance sheet. With that in mind, let's walk through a worked example to illustrate how to account for an accrual in the financial statement. So in this scenario, we're told that Billy's business has a financial year ending 31st of December 20x5. He pays his telephone bills in arrears. In other words, he pays after the service has been used, and his payment schedule is shown in the table in the bottom left of the slide. He pays £100 on the 31st of January 20x5, covering the period from the 1st of January to the 31st of January 20x5. He then pays £580 on the 31st of July 20x5, and that covers 6 months running from the 1st of February to the 31st of July. And finally, he pays £600 on the 31st of January 20x6. So this final payment covers 6 months of phone usage from the 1st of August 20x5 through to the 31st of January 20x6. Our task is to calculate Billy's telephone expense for the year ending 31st of January 20x5. In other words, we need to determine what telephone expense account should appear in the business's income statement for that period. And we can do that by creating a timeline. So we'll start with the financial year, which runs from the 1st of January x5 to the 31st of December x5. Let's now mark out the expense periods. So the first payment of £100 covers the month of January. x5, that falls within the financial year. The second payment of £580 covers the months of February to the end of July. And that payment was of an amount of £580. So again, all those 6 months fall within the financial year. So far, so good. And it's the final payment that's the important one. The final payment of £600 covers August 20x5 to January 20x6. So over the first 5 months, August to December, those months fall within the financial year. It's the January portion which belongs to the next financial year ending 20x6. So let's now calculate the total expense for the period. We do that by taking the £100 charge from January. We add on the 6-month charge of £580 from February to July. And we also need to factor in 5 of the 6 months from the £600 bill. So the months of August to December fall within our current financial year, so we need to reflect only 5 of those 6 months. So we take the £600 and multiply that by 5 divided by 6. So add that all together, our total expense for the year ending 20x5 is equal to £1,180. That's the amount Billy has used and benefited from during 20x5. So that's the total amount we need to report as a telephone expense in the income statement. But only £680 of that has actually been paid for using cash during the year. So the cash payment made to satisfy that expense was equal to the £100 payment made at the end of January and the £580 payment made at the end of July. The remaining £500 hasn't been paid for yet. It's paid in January 20x6, so we need to record that amount as our accrual. So our accrual is equal to the benefit that we've received in the current year that hasn't yet been paid for. So that's the £500 of telephone expense, which covers the month from August to December. So we can summarise all of this using a journal entry. We debit the telephone expense account by the full amount of £1,180 because that's the total cost of the telephone service used during the period as per our timeline. We credit cash for the amount of that telephone expense which was actually paid for during the period. So we credit cash by £680, and we also need to credit accruals because we have a £500 amount which represents part of the telephone service which the business has benefited from but not yet paid for as at the 31st of December or year end. So that's our journals. We debit the income statement £1,180, we credit cash £680, and we credit accruals £500. That's it. That's a clear step-by-step application of the accrual principle. Hopefully that made sense. If you've got any questions about prepayments, accruals, please feel free to fire them off in the comments. I'm more than happy to answer any questions. If you like the video, please smash the like button and consider subscribing, and I'll see you guys in the next one.